Hey everyone, Jake Invest. Nvidia is a very profitable company, but is it worth the price that you are paying for it? So Nvidia has a PE ratio of 44, which is pretty high, but if you look at their financials, they are doing extremely well as a company. Nvidia revenue is 61% year over year. In 2021, they made $26 billion. That's pretty insane, and they have a really good net income as well. They're constantly making more money, and 2021 was their best year. I mean, my girl just farted. I don't like how it spiked up so fast. That might be because of the pandemic and everybody buying graphics cards while they were at home on their computer, and they were overpriced graphics cards because of the chip shortage. And currently they are going to be struggling with getting chips for their graphics cards. So I was looking at their valuation. Unfortunately, it is not worth the price that we are paying for it. So if you look at the fair value, it's an estimate of what the stock price is worth today based on the cash flows the company is expected to generate in the future. Currently, the price is around $170, but the fair value is $95. It is trading way above the fair value, right? It's 77% overvalued. So, I mean, this is kind of one of the most overvalued stocks in the stock market, like in the S&P 500. So you gotta be careful if you get into this company, because it could drop down to its fair value, which would be consolidating. So, I mean, it does look cheap compared to what it was at its high, which was like $330. But if we look here, like, this is insane. Look at the market cap on this. Was like 5 billion all the way up till 2016, and it just shot up. It hit a market cap of $823 billion. If we look at a forecast on stockanalysis.com, a lot of analysis are saying that this stock is a buy, right? So look at this 12-month forecast. So in 12 months, they're saying that Nvidia could hit a high of $420, an average of $332, and a low of $161, which isn't too far down from the price it is now. And the analyst consensus is a buy, but according to the fair value of the company, it's pretty risky in my opinion. So there's a 0 strong sell, a 0 sell, a 9 hold, a 31 buy rating, and a 13 strong buy rating from 53 stock analysis. I don't know how they get these numbers, but there's definitely going to be a lot of growth ahead for this company. We look at the statistics. Shares change year over year was 1%, so that means they added shares. Pretty high PE ratio, but they're really doing good as a company, right? Their income statement in the last 12 months was $26 billion in revenue and $9 billion in net income over the last 12 months, and a $3.85 earnings per share. It's like, should I get it or should I not? It's like in the middle of all the price analysis, because if it goes up to 332, that's a 94% increase, but the fair value is 77% overvalued. But that doesn't necessarily mean that the stock is going to go down to $95, right? The stock could go down to $150, it could go down to $100, but it could possibly never even drop down to that price. So you never know whenever it's truly a buy. Now, if it did drop to 95, it would be a strong, extremely good buy, right? So you never know what's going to happen. So if we look down here, according to earnings and revenue growth forecast, they predicted the growth in the future. So right now it's 2022, they had a revenue of 26 billion, and then by 2023 they expect there to be a 34 billion revenue and a 10 billion earnings net income. And then all the way up till 2025, they expect there to be a $45 billion revenue and a 15 billion in earnings. Like, that is pretty freaking good. Like, this company, I think, is always going to be a profitable company. I think that no matter what, the company is going to be profitable and it's always going to be a buy. Now, it could be overvalued a lot, like 77% overvalued, but it's never going to like become unprofitable. This is one of the best companies in the world. They make the best graphics cards in the world, and they focus solely on graphics cards because that is what they're good at making. And if you're good at making something, you just want to make that thing. You know what I'm saying? Like, stick to what you got, and maybe one day they will make some other things for computers. And I'm sure they do make other things, but their main thing is graphics cards. I have an Nvidia graphics card. Everybody gets Nvidia graphics cards. They're literally in almost every computer that you buy, like an integrated Nvidia graphics card. Every time I look up computers, it has one. So they definitely have a monopoly, almost a monopoly, on graphics cards. I mean, there's AMD and then there's Intel, but Intel graphics sucks. That's why people buy Nvidia, because Intel, they don't have good graphics cards. Nvidia's return on equity is forecast to be very high in 3 years, 46%, a profitability measure which shows how efficiently a company's management team has used its shareholders' money to generate profits. Right? So they use the money that we invest to make profits. Like, they're actually using the investments that they have. So they use it wisely, and that's a good thing. So whenever you invest in Nvidia, they actually take your money and use it for projects and whatever they got to do. So let's see their financial health. Nvidia's short-term assets exceed its short-term liabilities. Nvidia's short-term assets exceed its long-term liabilities. Commitments the company has made which are due in more than 1 year. Assets owned by the company which can be sold, converted to cash, or liquidated within 1 year. Alright, so that's the short-term assets. So yeah, that is really good, you know. Like, they have 28 billion in short-term assets, which means they can just sell it and then pay off their liabilities. So they have a really good debt to equity history. So they have more equity than debt. So like, they are passing all the financial health evaluations. So like, it's all a good check mark. Like, this company checks out on everything, in my opinion. I think that this is like one of the best companies, and I think it's possibly a buy, even though the fair value is $94. I think that in this market, this bear market, I think that it could keep going down. Like, let's be honest, it could keep dropping. So I'm gonna hold back and see if it goes down even more. But once that bull market starts, it's time to run into all these things. But I just want to say that I am a long-term investor. I am a dollar cost averager, and I invest mainly into ETFs, right? I never recommend anybody buy individual stocks. I do like profitable companies. I don't really like buying into unprofitable companies because they are very risky, especially right now in this bull market. You do not want to be in unprofitable companies. You want to be, well, this ain't financial advice. I want to be in only profitable companies. Now, once I think that these companies are at their bottom, or even the unprofitable speculative companies are at their bottom, I could just buy a shit ton of it and then wait like 5-10 years, you know, long-term investor. When you buy it at the bottom and it shoots up like in 2021, imagine all that money I can make, or we all can make. So this is a quick overview of this company. Nvidia's set to report its Q1 earnings on May 25th. Its revenue is likely to be $8 billion, up 42% year over year, but Nvidia's management may issue a conservative guidance in light of worsening chip shortages. Nvidia's growth momentum could temporarily slow down in Q1. I say this because China imposed the strict COVID-19 related lockdowns in the first half of April, which has worsened the chip shortages globally. It has gotten to a point where companies are stripping out washing machines for semiconductor chips and foregoing installing infotainment functionality in cars. Nvidia's Q1 typically ends in the first week of May or in the last week of April, which means that it may have borne the brunt of these shortages for a good 3 weeks, and its revenue for the period may have taken a hit. Now, one might argue that the chip makers Intel and AMD did not report any such supply disruptions in their Q1 results, and so Nvidia will also be unfazed. However, that is necessarily a given, considering that both AMD and Intel closed their quarters within March, well before China imposed widespread lockdowns. So they're saying there could be a little issue with the chips in for Nvidia, but hey, we'll see. I like to wait till after earnings before I make a purchase sometimes, but sometimes you can buy in before the earnings, and if they have a really good quarter, then the stock price could shoot up and you can make a bunch of money. But if you buy them and they miss, the freaking stock's gonna tank, and then you make a huge loss like on Facebook did. And even Apple, like Apple, another stock that I want to go over, freaking beat their earnings like crazy and still tank. And I want to say VTI, VU, VT, and VGT. VGT is a tech ETF. VTI is the total U.S. stock market. VU is the S&P 500, and VT is the total world stock market. 40% international, 60% U.S. stocks. So all really good ETFs that I like to invest in. I think that the majority of my portfolio should be in ETFs. So that's just my opinion. Y'all have a good night. Like and subscribe. I'll be making more videos more often, so please stay tuned and hit that subscribe button. Peace.